What's up everyone, it's Scotty with MoneyVest. So in today's video, I wanted to go over the magnificent 7 stocks that pretty much sold off yesterday and everything else was green. And this was not a coincidence. This didn't happen just because investors wanted to take some profits off the table and just wanted to sell these 7 stocks. But instead, it was part of a bigger rebalancing project because the NASDAQ 100 did announce some shuffling around of companies as part of their yearly and quarterly reconstitution of the indexes as well. So in this video, I'm going to break down. There was a report that came out which did suggest why this actually happened and why it may continue for a little bit longer. So I'm going to break that down. As always, if you enjoy this video, find it helpful, make sure that you drop a like and don't forget to subscribe to the channel. If you're just joining us for the first time, and links to our Discord and Patreon is going to be down below. We'd love to have you on board as a MoneyVest member. You get access to all the members-only private videos, over 40 plus trade tutorials and lectures, investing lectures, and of course, full access to all of my spreadsheets, including fair values, and of course, Discord access with buy and sell alerts, options alerts, trade ideas. Everything is going to be included with the link down below. And again, we'd love to have you on board over there as well. Also, do check out the courses, fundamental analysis, technical analysis, options, and psychology courses, lifetime access to these. And do connect with me on Instagram. My handle is going to be CASWRP. And again, link's going to be down below for all these things as well. So this right here is what yesterday looked like. We did have, again, the 7 stocks, the 7 core, the Mag 7 as we like to call them, Microsoft, Apple, Google, Amazon, Tesla, Meta, and NVIDIA. All of them selling off on the back of that rebalancing that is going to take place. And in fact, Monday marked the first time in over 11 years since 2012 that the NASDAQ 100 managed to be positive with all magnificent 7 names, Apple, Amazon, Tesla, NVIDIA, Microsoft, Meta, and Google closing in the red. So this is the first time it's happened in over 11 years. The market was up, NASDAQ 100 was green, and other 7 stocks, the core 7 stocks, were actually down. Now this right here is macro tourist Kevin Moyer has an explanation as he warns that selling of those heavyweights may just be getting started and it may actually continue because NASDAQ over the weekend did announce the final changes for its NASDAQ 100 rebalance or quote-unquote reconstitution that will kick in with Friday's option expiration. So the 3rd Friday of the month of December is the quadruple witching Friday, where a lot of option contracts and futures expire at the same time for stocks and index options and ETFs. And the committee had recently flagged the Magnificent 7 group's heavy concentration and its methodology of dealing with that. Rebalancing by index committee is done quarterly to limit the influence of the biggest companies, but the NASDAQ did a special rebalancing this summer, and those company weights are capped at 20% of the index if they exceed 24%, with the combined weight of those exceeding 4.5% capped at 40% if they exceed 48%. And here's what the NASDAQ committee's recent chart basically looks like. If you take a look at the top 10 index holdings, just 10 of the 100, right? So 10% of the companies make up over 51% of the index. And if you take a look at the next 3 big companies, Apple, Microsoft, and Amazon only make up over 24% along with the other 7. And if you take a look at just Apple and Microsoft, along with the other, we've got other 8, it's over 21%. And then of course, this right here is the NASDAQ 100 equal weighted index, which would be roughly around 11% for the overall portfolio weighting, right? So these are index holdings for the top 10 index weights. Just goes to show how much concentrated the market has become into these magnificent 7 companies. And it's more so when you consider the NASDAQ 100, because NASDAQ 100 is the NASDAQ index of the 100 largest non-financial companies in the US and mostly consists of tech and growth stocks. And it's a market cap weighted index. So it makes sense why these 7 companies would make up over half of the index in terms of its index holdings. So to kind of limit that, of course, there needs to be some considerable reshuffling and rebalancing that takes place because Moyer flagged Barclays, which noted a considerable surprise from the rebalance, saying those big stocks saw aggregate downweights translating to roughly $13 billion in supply, in contrast with the anticipation, according to the index methodology, that those names would see meaningful $17 billion previously projected to buy upweights as well. And Moyer says that a monster stock selling needed for rebalancing: Apple at $4.7 billion, Microsoft at $4.1 billion, Amazon $2.26 billion, Google at $1.22 billion, NVIDIA at $1.76, Meta $135 million, and Tesla needs buying of $2.9 billion, but the bank notes $5.6 billion in billion in buying was expected as well. So really what he's suggesting is that there will be a significant amount of rebalancing from out of these stocks over to the other 93 NASDAQ names. So money raised by selling those stocks must now go into buying the remaining 93 companies in the NASDAQ to complete the rebalancing process, because a lot of the investment funds that are tracking those index changes would be forced to adjust their portfolios if they want to keep up with the new rebalancing of the NASDAQ 100. So the selling of Magnificent 7 to buy the rest of the NASDAQ 100 created one of the worst days of relative performance over the past couple of years for the market as well. And Moore commented the NASDAQ committee for trimming the big names and suggests selling could keep happening as other committee may also follow suit in the new year as well. So that actually does explain why we saw a day like yesterday where the Magnificent 7, the core of the market, definitely selling off on the back of Meta, Google, Amazon, Tesla, Nvidia, Microsoft, and Apple. Valuation's been a little bit of concern, but these are also some of the best performing stocks in the market for 2023. Not only in 2023, but also in the S&P 500. But these are also some of the best performing stocks so far in 2023, because it's because of them, because of these 7 companies, the S&P 500 is up a little bit over 25%. The NASDAQ is up over 30% as well. And it's obvious, right? Because these companies are performing well, and of course the indexes are market cap weighted, the concentration risk is getting bigger and bigger because the index weightings for these companies has only grown over the last 6 to 12 months. So that being said, there is a level of rebalancing that's taking place, which could obviously result in some selling pressure in these companies and could result in money flowing out of these over to other parts of the market, especially the other 93 companies in the NASDAQ, not to mention the other 493 companies in the S&P 500 to kind of balance out the overall market weighting. And we are starting to see some outperformance from the equal weighted indexes as well, so such as the NASDAQ 100 equal weighted index and the S&P 500 equal weighted index. The RSP has seen a very significant amount of outperformance over the last couple of days, and that's primarily because of the reason why that the technology stocks, of course, are starting to sell off and the money is flowing over to other parts of the market as well. So hope you all enjoyed this video and found it helpful. Again, the bottom line is that they are going to see maybe some type of forced selling pressure because of that rebalancing, not to mention some profit taking in January of 24, according to my expectations. And of course, there is some level of valuation and concentration risk, which is also going to cause some potential pullback and dips in these technology companies. But long term, I continue to remain bullish and in these companies, and of course, continue to believe that there's going to be a lot of potential for these businesses over the long term as well. So hope you all enjoyed this video, find it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Definitely do check out the links down below for the Instagram courses, lifetime access with over 30 plus hours of content, 130 plus videos, and definitely do join our Patreon and our Discord. 40 plus videos, lectures, tutorials, Excel spreadsheets, and Discord access. Everything is going to be included with the link down below as well. Happy investing, and I'll see you all in the next video.